Hello traders, welcome to Friday, the 19th of July. This is the post-session review, and we're also going to look at the stats for the week. Our week started on Wednesday, and it was the live stream day. It was on the 17th, and we had a losing day. We started right off the bat with some drawdown, but we have recovered nicely. Yesterday was profitable. Today was profitable, and it's one of those nice things that validate not only that the trade plan is amazing, that the risk reward is amazing, but even in difficult market conditions like we've had these last few days, even with humongous swings, we've been able to trade a small account profitably without over leveraging and without taking on excess risk. But we have been able to trade these markets effectively, and that's why I wanted to do this. I've gotten many PMs, many messages through Skype how these swings are just untradeable, how the risk is just too big, and it's hard for me to understand that because I have a huge account. So I got tired of people making up excuses as to why they can't be profitable or as to why they can't trade these markets. And all of that comes from fear. And maybe you have taken a couple hits, but you know what? The only way to recover from that hit is to take that next trade. Okay, we're going to get into the trades in a little bit, and the order flow is very complex today, but you'll see how harmonics just were very special today. Before I do that, though, I'm going to bring in the spreadsheet. Okay, and we see that we had the drawdown the first day, which was $432. It was an ugly drawdown. Okay, and we had then a profitable day and then another profitable day to do. I'm sorry, today. So this is 380 because from protection and because of the delta, it wants us to build a cushion before we, start trading heavier contracts. So I told it I wanted to start with two. So it does that for the first two, and then it just scales back down. And it really wants you to get above that $6,500 before it starts aggressively kicking in. Okay, so nonetheless, in order to make the math work out, since I'm trading two contracts, I put the 380 here so that in the fixed ratio and in the smooth ratio, the numbers would be correct and reflect the correct P&L in these columns. Okay. So as you can see, we started with $5,100. We're sitting on, we started with $5,100 and we're sitting at $5,400. So we've had a nice gain, net gain of $350. Here is the account. So you guys can see 380, 380, 380. Balance is 5419.99. 5419.66. There's a little discrepancy there. And when I get the hard numbers off of the statement, I'm pulling them every day and I'm putting it there so that the numbers eventually can be penny for penny. Right now, there's just a little discrepancy because of the slippage and the settling of the price. So that will be adjusted. But as you can see, we have a nice gain so far, and this is 3 days of trading. So I'm very pleased with how it's coming considering the market conditions that we've had and the environment that we've been trading in. I also wanted to bring in the stats for the week so you guys can see them. Where did they go? Where did they go? Where did they go? Okay. Stats for the week are right here. We can see that we started on the 17th, which was Wednesday, through today. We had a drawdown of $420. That was the very first day. Since then, we've made $770, which has brought the account back up to a positive value of $350. Okay, our Sharpe ratio is 309. Our the other one is, I don't care about these things. What I care about is the P&L, and what I care about is percentage of profitability. Okay, some people are statistic buffs. I'm not. I just want to stay at a with a positive expectancy and deploy the money management. And as your account grows, the money management will become a little less important once you feel like, okay, I'm comfortable with 6, even though I can trade more because my emotions, that's all they can handle right now. We'll talk about that later as the accounts grow. But 75%, holding true to that number. You should be in the above 70% because you're following the order flow, and the order flow plays out over 70% of the time. This is proof. You can see this, and we'll hopefully we'll be able to stay above the 75 percentile or the 70 percentile. But even if we were to drop into the 60s or God forbid the 50s, because of the risk reward, we're still going to stay profitable even at those low hit rates. That's the beauty and power of risk reward. Okay, it also helps control the emotions significantly. So this is where we're at. These are the stats. I think they're pretty spectacular considering the account's 3 days old, and we got into some drawdown, and we've made a positive. We recovered the drawdown and have a positive $350 in a couple of days. So fantastic. Let's see if next week we can continue on that trajectory. I don't see why not. I'm speaking a little fast because I want to spend more time on the chart and not show so much stats. As for the longer term, it's Friday. I canceled that order yesterday. I showed you guys in that post-session video. I don't like to get into any longer term trades on the weekend and have to hold them open because of that gap and because of those factors that you don't know exactly what's going to happen on the weekend. You don't want to be on the opposite side of a gap and having it affect you in a negative way that could be extremely painful for your account and for your emotions. All right, back to the task at hand. So where are we? Okay, so we get to the market and we see that the market is somewhere in here. So we need to make sense of what's going on. Okay, so we need to ask ourselves, what is the main swing? Okay, so when we see that we have this high and this low, we know that that is not a main swing. That is a correction. Okay, and it's a correction of a main swing. So where is the main swing? From here to here. That is the correction of this is the correction of this main swing. Okay, so we can't call anything else a main swing other than this. Okay, then the market has come down with very good momentum, very good depth here, very strong move to the downside here. And then the market retested the area, and then the buyers came in to rally up to test the highs. And then the market came down, had a minor correction here, and then the market tried to get up again and could not break above those highs, and then the sellers ultimately ended up winning the battle at these levels to test these lower levels again. Then the buyers came in. Okay, now we have 1, 2, 3, 4 points. Okay, 2 tests above, 2 tests below. What does that mean? We're in a range. Okay, this market is range bound. Okay, and now things get complicated. Okay, and now we have to figure out what the market is working towards. Well, the market is working towards a new structure high. We know that because the main swing is a new structure high and we expect a higher low. All right, so now we know that the buyers are eager to defend this area, which is why I drew that rectangle, and we also know that the sellers are eager to defend these areas because they have. Okay, the rest are areas that I was looking at intraday for longs and tentative areas. These orange areas, I like them to be more of the stronger support or resistance or the intraday supply and demand areas. And you often draw cucumbers in the shorter term areas of interest where certain harmonic factors come into play. So we're going to draw the harmonics now so you guys can see the harmonics. Again, ultimately, we're looking for the market to achieve this, right? So taking the lowest point, which is test, 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 okay, projecting it forward, puts price somewhere in this neighborhood here, okay? That's where price is expected to go, okay? In the meantime, do we have any harmonics here in the shorter term order flow? Okay, we have here, okay, this is a retest. We can move that here. We can see that, surprise, surprise. Let me move this so it doesn't get in the way. Surprise, surprise, right? Probably it will happen. So now we can say, okay, how about to the downside? Do we have anything to the downside? Surprise, surprise. What about in the shorter term? Okay, we have a swing that came up here, had a proper correction, right? Okay, just about right. How about to the downside? Do we have anything? Surprise, surprise. Okay. And now we have a proper correction, ABC deep correction. So what does that mean? Slightly larger order flow. Can we move that forward? Surprise, surprise. How about these little ones? Surprise, surprise. Now this one fell a little short. Okay. Where else? Surprise, surprise. Okay. Folks, once you learn how to properly draw these lines and use them to your advantage, you will be a surgical ninja with your trading. Okay, the only difference is, how does your trade plan have you addressing these harmonic lines? Okay, these harmonic expectations. Okay, so why did I get long here? Okay, and why was I interested in this area? Number one, absorption to the high side. Buyers tried to absorb and they got absorbed. Buyers came in to defend that area. What did I have here? I already pointed out. We had an ABCD, okay, SOS3 signal, okay, to the long side. Expectation overall is for a new structure high. I felt good about that. What I didn't feel good about is the risk. Technically, it should have been all the way down here. My account can't handle that, right? Especially on two contracts. So where was my stop? Right down here, okay? I felt good enough about the buyers being able to defend this area, okay? So I took on the risk and I trailed here because price achieved, okay, an area here where the market has sold off very aggressively, okay? And I saw that when I got in, the sellers got very aggressive defending some of their levels. So this was a really strong area of selling, and I wanted to protect my trade. So I locked in, okay, and said, I'm locking in. I also had, I'm sorry, I also forgot to mention, price had also achieved a profit target of the smaller pattern, okay? So I wanted to lock in the 30 points that I made on this trade, okay? So I'm sorry I didn't mention that. Everything has a reason and a purpose and is in line with the trade plan. All right, so now I got taken out. Now I'm looking for longs again, okay? So as price comes screaming down here, I don't have a good rotation to take. I'll show it to you. There's no good rotation here, okay? Even though my cucumber was there and I had a good area of interest there, okay? And as the buyers try to come up, the sellers are crazy, crazy, crazy trying to overwhelm them and absorb them, and they do. And then here, I also did not have a good rotation. Oh no, that was the one. Yeah, well, this one. Either way, I didn't have a good rotation. My rotation did not come until this candle right here, and I engaged. I engaged because to me, the market was looking and able to at least climb. And then sure, price came back below this a little bit, but at the end of the day, where are we? In a range, okay? I knew I wanted to get long here, and I knew that I wanted to, my stop had to be down here, okay? So why was this oval down here? Well, it's the 127 and the 1-to-1 of the overall ABCD to the downside, right? So I knew that that area is an area that the buyers should defend. Let me draw that so you guys don't miss it here. Okay, here we talked about this longer one, projecting it forward here. This would have been a great area to get long, okay? But I took this area that looked better to me. I got the price action confirmation. I saw the buyers wanting to get in. They were just being absorbed, but the sellers were already in trouble, okay? Look at all these deep corrections. Okay, what does that mean? You can't absorb if you're getting consumed, okay? In general, all right? So I felt good about using this area as a rescue mission because I could not add excess risk to my trade. I'm already in with 2 contracts. I can't enter any more contracts without it affecting the account in a negative way. over leveraging it. So I had to do the best of both worlds. Is that okay? I'm expecting this area to hold. This is ideally where I would have gotten long. I wasn't sure that price was going to get there, so I entered early. But as price came above my entry there, I locked in there to guarantee myself a graceful exit. Then at the next candle, okay, and then at the next candle, and then price eventually took me out for 8 points. So those were my two trades for the day, giving me 38 points for the day. So we see that the market has been and is very harmonically balanced today, okay? But how does that help us in a range-bound market? Very, 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 very much so it helps us, because now we know where these swings are likely to come in, and then we can look at these harmonic completion areas to the footprint of the buying and selling and create confluence, okay? Now, it's not the best area to take longs because it's kind of not in the middle, but it's, you know, it's in the middle of no man's land when you're talking about range trading, right? Because technically you want to be long down here and take profit up here, okay? You don't necessarily want to get short up here unless a pattern completes, right? And the reason why that is because the expectation is to the upside, not the downside, all right? So for those reasons, you want to be careful about where you decide to engage and in what direction. But the market tells us, and harmonics gives us a confluence along with the footprint of the buying and the selling to help us make good decisions and develop very accurate areas of interest. As you can see, the market is very harmonically balanced, even though to the naked eye it looks like it's been moving sideways, right? It's been moving with sideways, but with purpose. Okay, so the market is now pressing up into this area again. The sellers may defend, may not. You know, we're winding down on Friday. There may not be a whole lot of action in, but you know, is it surprising to us that this market is pushing to make new highs, even though the sellers have done everything possible to make a low below this? Okay, no, that is the expectation. You're aligning yourself with the strength of the market. That's what the market is working towards. Okay, sometimes the market doesn't move in an efficient manner to produce those new highs or lows, and sometimes we get stuck in the mud, and sometimes that range is wide, but you have to, this is the chart you have to work with, right? These are the cards you were dealt. So you're either going to be a spectator and read the chart to gain some proficiency, or you're going to just say, screw it, I'm not going to sit here because I'm going to start looking for trades, and then I'm going to start getting impatient, and then I'm going to start, you know, and taking that cascading effect towards a bad trading day. Or, you know, you're going to sit here and say, you know what, I'm just going to pick the best risk reward opportunities. And there's nothing wrong with that. But you have to understand that if you start doing things like that and you start doing them consistently, it's going to affect your expectancy. Okay? Everything about trading is about expectancy. Because if you tested 5 different signals in your trade plan, and those 5 different signals taken every single time gives you 70% win rate, and then you take only 10% of those trades, okay, what are you doing to your expectancy? What are you doing to the fact that in those 10 trades, because you missed out on the other, you know, 20 or 30 trades that got you that expectancy, now you're trading in a position where you can't measure an outcome. You can't measure what your, you know, what anything is, because you could take on 2, 3, or 4 losses. And it wouldn't have mattered had you taken all the other trades because of the expectancy. But because you took a dump on the expectancy and you took a dump on your trade plan, the outcome is probably not going to be what you want. Okay? Luckily, you have risk reward on your side, so maybe you'll be a break-even trader, maybe not that profitable, or you may get lucky and have great runners that will, you know, overcome those. But guys, staying profitable, growing an account is about the frequency of your trade plan and the expectancy of your trade plan. Very important things to keep in mind, very important things to strive for. Okay, okay, I think we've done this this video some service. I think that we have addressed the range-bound markets. I just showed you guys how to identify a range-bound market, and I think I showed you how to identify areas of interest with harmonics, showing you how to draw harmonics properly, and using those harmonics to enter in the expected way, which is to the upside. Okay, so I believe that's it. I think I was a little more efficient than I thought I was going to be. Anyway, very happy about the small account. Very happy that we're able to see this. Very happy that I'm able to share this with you because I think it will empower you to just let go of the fear, get your trade plan together, you know, validate it, build that belief system, and just trade it. Okay? I'm not necessarily asking you guys to trade like me, but if you read the chart the way, similar to how I read the chart, and you create the efficiency and the accuracy to read the chart properly, then that's going to translate into better decision making and hopefully turn that equity curve in the right direction. All right. So we're going to continue with this small account. We're going to continue to have fun. We're going to continue with the channel. We're going to continue with all those things. And I appreciate you guys. I thank you for the opportunity to allow me to share something that has changed my life with you. I'm hoping that this in turn teaches you the real trading, the real way to trade, so that you don't become or continue or become victims of those crappy salespeople that all do sell you black box systems that don't work. Okay? So that's all I have. Have a great weekend. I'll see you guys on Monday. And I'm looking forward to another amazing trading week. Thank you very much, and goodbye.